I would be remiss because I know that my daughter and my wife watch this. I gotta say happy birthday. Most people know that Josephina's birthday was yesterday on Halloween, so happy birthday, little girl. Yeah, so much is going on. We got a confirmed reversal in the broad market. We've got so many opportunities. Earnings season is still kicking it. So we've got so many opportunities for doing all kinds of trading. So yeah, Sip, we're good to go, man.
Well, let's go ahead and start off with the S&P because we've been at some highs for quite some time, and it seemed as if the big shocker midweek this week was what Meta and Apple earnings a little disappointed, and
Yeah,
we could see,
Microsoft as well, man.
and that was one of those after hours where the market tanked, and then we gapped open, and then turn around today, and we've got employment, which is kind of bringing us back up. So we're starting to see a little bit more of a battle here at these still kind of highs.
Yeah, well, let's first start off with our general picture, right? Because that's what we've been worried about for like over a year, right? Like close to 18 months. So that general picture is like what's happening with interest rates, what's the Fed thinking? And I'm going to stick by my gun, Sip, and say that the Fed has kind of got us to a point where, they're now not just worried about inflation getting out of control, but they're also worried about our employment situation, right? Our Fed has that dual mandate of keeping, Americans employed and at the same time keeping information in control. And a lot of times those mandates are at odds. They've been focusing on inflation ever since the end of the pandemic, right? And I feel like they've hit this point. I mean, yeah, they can go a quarter point here, quarter point there. It looks like the market has priced in a quarter point drop in November and another quarter point drop in December. But we're now into this fine tuning. When we look at the Fed meeting minutes, it's like they're butting heads with each other, which kind of tells me that they're at this balance point where they're going to be just doing minor tweaks here and there, which means investors are now focused on what I feel like they should be focused on, which is that the actual companies, the actual assets that are in the markets, right? So this earnings season was one of the more important earnings seasons in a while because all of a sudden investors are no longer focused on what the powers that be that are controlling the big levers in our economy and are now focused on how well are is the actual substance in the economy. And a lot of folks have been focused for years on those big players, Metastock, Microsoft, Nvidia, Tesla, Amazon, Facebook, Meta, that's the same thing. Google, right? Those big players, right? Those are the large caps that have been really like if they sneeze, the rest of the market feels it. And yeah, this earnings season, some of those companies, and I'm thinking about Meta and Microsoft, really disappointed investors and it caused a little bit of a sell off. But I have to say, investors, as we've been pointing out technically in the charts, they've been on edge, Sip. They've been like uncertain about what's coming next. I think they're focusing a lot on, this upcoming presidential election, which really, when you look at the substance of it, isn't going to have much effect on the markets. But people get rallied and they are always looking towards the next event, right? So I feel like there's a lot of folks focusing on that event. They're also thinking about what's happening in the Middle East, what's happening in the Ukraine. Is North Korea joining in with Russia to work against the Ukraine? What's NATO going to do? What's the EU going to do? What's Iran going to do? What's Israel going to do? So this is on people's mind. Is it going to be Trump? Is it going to be Kamala? So this is causing investors to kind of like wonder what are the rules of the game, and when they don't know the rules of the game, they sit on their hands, and that's kind of what they're doing. And then any little tinder that you throw into that bunch of like that pressure cooker of nerves causes some sort of move. And that tinder this time was, not really enjoyable earnings coming from Microsoft and Meta. And that caused a sell off yesterday. And, the employment numbers are nothing special today. Neither really was the PCE, the personal income and outlays number yesterday, nor the GDP advanced numbers for quarter three. They weren't really, like I said, people aren't focusing on the big numbers, I feel like, anymore. They're focusing on little earnings. I think today what we're seeing is less of a response to earning to employment and more of just bargain buying.